हाँ, okay, bye. Yaar, my mom, my dad, my mama, even my friend's ex-boyfriend is telling me to invest. Where do I invest?
Okay, there's a basic checklist that you have to follow. Okay? Number one is look out for your risks. Look out for the capture ratio. And look out for the rolling returns. Oh, and also one more thing, very important. Your portfolio should be diversified. You should invest in all the asset classes. Arey, listen to me. Make sure a portfolio is diversified. Hello?
Sir,
Not right now, Tanya.
I need your help.
Tanya, I'm busy.
2 minutes.
Tanya, not right now.
Social media crisis.
क्या हो गया?
Huh. Now that you're listening, I had a word with Abhishek. I wanted to get better with investments, but everything that he said went above my head.
Obviously, I've taught him really well. What's your point?
My point is, I don't have the interest to get into the details. I need a very simple plan so that I can make more money.
Look, I can't go around everyone and tell them how to manage their money. I have better things to do. So I'm sorry. Okay?
But
go and ask that boy.
My performance will get better if I make more money.
But last quarter, your performance was really bad.
Which is why I need to get it better.
I'll do it in 10 minutes though.
Done.
Okay, done. Let's get started. So what do you know about the stock market?
There are companies
Okay.
that grow, so they list themselves.
On what?
Stock exchange market.
Okay.
Then you buy them. That's
Where?
it. Some app.
Got it. So looks like you know a lot. What we'll do is we can spend 20 minutes, 30 minutes just understanding how all of this works. Or I'll do a very back of the envelope quick version. Okay?
That, yeah.
It will not be 100% accurate, but it will not be wrong also. But you'll get an idea of what this is because I don't have time and in 10 minutes I have to make your 10-minute plan. So we'll do this quickly. Okay? So can you pass me this? All right, I'll take a small portion of this. Now, let's imagine that this is a company and all these blocks are represented by shareholders. Now, these are multiple shareholders. You have some promoters, you have investors, you have all these other things. Now, these companies grow. Can you name me an international brand? Any brand?
Nike.
Nike. Perfect. You're a sports girl, right?
Yes.
That's fine. Do you think Nike is selling more shoes today than it was selling, say, 20 years ago?
Definitely.
So there is some growth. What do you think is unique about Nike that no other company has?
They're doing really well.
Okay, they're doing well. What else? Do you think they're a good brand?
Yeah.
Maybe. So people
Aspirational
trust
brand.
And people trust the name, right?
Yes.
So whatever, they have some moats and people like this particular company. So this is the company, let's suppose it's Nike, and it has a bunch of shareholders. Now, for whatever reason, the shareholders think that the company's value is going to increase. Let's suppose you also feel that the company's value is going to increase. It's going to do more sales, it's going to make more profit, more people are going to run, more people are going to use their wear, athleisure is a thing, blah, blah, blah. Nike badhiya hai, ya XYZ company badhiya hai, and you also want to buy a certain stake. Now, you can't buy a stake just like that because the company is private. For us normal folk to buy a stake in a company, it has to list on a public stock exchange, and it's called a stock exchange because anyone can just go and buy and sell it and invest in a company. So now this company has to list on a stock exchange, and let's suppose we have this. In India, we have 2 stock exchanges, National Stock Exchange and Bombay Stock Exchange. I'll represent both with one prop. And let's say you and me, and let's say a bunch of other people are now allowed to buy and sell this stock. So if I give you some money, first ko salary credit हुई है. You can actually बहुत है काम के हिसाब से. So invest some of it and you get a share for the investment that you made. That's it. That's what a stock exchange is. Now, over a period of time, if the stock does well, people will pay more for it. How much did you pay for this? What's the price of the share?
Say 300.
Say 300 rupees. Let's say the stock was doing 100 crores in revenue. 10 years from now, it's doing 1,000 crores in revenue. Do you think the value of the company is increased?
Yes.
It has, right? So basically what you've done is we've added more value to the company. So basically if the company does well, the stock price goes up and you just sort of earned more money because the value of your share went up. This is step 1 completed.
Okay, now I got this. But now which stock should I buy?
I'll tell you what stock to buy. But before that, you tell me what the summary of this entire thing was. What just happened?
Okay, so this was a company,
Yeah.
and I bought the shares for this company,
Yeah.
say right now, and then
Yeah.
10 years later, it grew. So obviously the profits also grew. So my money has increased.
Correct. So this is basically mota how the stock exchange and all this works. So your question was, what stock should I pick?
Yes.
The truth is, you'll have to learn a lot of stuff to actually know what stock to pick.
But just tell me, just give me names, na. I don't want to know the entire process.
वो तो नहीं हो सकता. You'll have to learn it by yourself because this keeps changing. You'll have to do the analysis yourself. You'll have to spend weekends on it. Time लगेगा.
Sir, this was supposed to be a simple plan.
So let's scrap that.
Okay.
Let's do a simple version. A good way to figure this out is with a mutual fund.
Now, what's the difference between a mutual fund and a stock?
Let me explain. Let me make this a little simpler. Can we remove this entire block and represent one company with just one block? Because it'll just make life easier. So I'll pick this up. Now this is one company here. Now do you think there are other companies also?
Yeah.
Of course. So there's another company and another company and another company and another company and another company. And this brings us to step number 2. Let's understand what a mutual fund is.
Yeah.
So now all of this has to be selected. Now there are actually 5,000 companies. So imagine 5,000 of these blocks over here.
They're listed?
They're listed
Okay.
on the stock exchange. And you'll have to pick maybe 10 or 15 from them.
Okay.
Sounds like a lot of work. So a simple way to do this is to get a mutual fund. So to understand a mutual fund, I have a pouch here. This pouch represents a mutual fund. A mutual fund basically has a manager right here, as you can see. This manager's job is to actually make sure that his mutual fund is actually doing well. So he will pick certain stocks. So he'll pick certain stocks based on whatever his fund analysis is, and he'll manage it and put it inside the mutual fund. So now you don't have to worry about what stocks to pick because the mutual fund manager has done it for you. They've done their own research, and you basically buy the mutual fund directly.
One question. If this person selected a bunch of stocks,
Yeah.
today these companies are relevant.
Right.
5 years later,
Yeah.
this brand or AI made something better and
Yeah.
they don't exist.
Yeah.
Then what?
Good point. So basically, that's their job. Their job is to rebalance the portfolio or say, hey, this company doesn't seem good anymore, so I'll replace it with this one. And now there's a new portfolio. And what did you do for this? Nothing. Also, why do you think this guy is actually managing it?
He gets money for it?
Correct. But where does the money come from?
Profits?
You.
Oh, me. Okay.
You. So whatever you invested inside the fund, a portion of that goes to the asset management company. Think of it like a fee, but it's expressed in a percentage. So they charge a percentage of whatever you invested every year as a management fee. Did you get it?
Yes. But I still don't know which mutual fund to invest in.
Correct. Can you name me a few mutual funds? Types of mutual funds?
Yeah. So there is mid cap, small cap, and large cap.
Okay. And what about these? Have you seen these before?
Equity, tax saver, flexi cap, small cap, debt, credit risk, short term, hybrid. I thought that was a working situation. Okay. Arbitrage. What the hell is arbitrage?
Arbitrage. Correct. Confusing, right? So now how do you pick a mutual fund? Very simple. First, we'll learn how to pick the right fund using a bunch of metrics. Then we'll have to learn how to analyze the returns and volatility over a period of time. We'll have to review the mutual fund after some time.
No. This is not simple. How is this simple?
So if you want to take the simple route, let's learn about index funds.
What is index?
Let's figure it out. So now that we've cleared this, let's suppose we had to select 10 companies out of 5,000 companies that I told you. How do you select 10 companies?
Abhi to randomly.
Abhi to randomly. What could be another way? If you had to pick the safest of them, what would you do?
Best performing.
Best performing. Now, what's the metric? It should not be the returns of the stock. It should actually be the size of the stock or how large that company is.
Okay.
So what if you pick the top 10 largest companies out of the 5,000? Is that sort of like a safer bet in guessing these companies are probably okay than the bottom 10?
Yeah.
Okay, so what I'll do is, we'll create a list of 1, 2, 3, 4, 5. Each of these represents the top 10 companies in the country. So the first top 10, number 1 to number 10, then number 1 to number 20, the number 20 to 30, you get the point, the top 50. So these are obviously the largest and the best companies that we have in India. This is called an index.
Okay.
And this top 50 stocks is called Nifty 50. And we have a list of 30 stocks, which is the same thing, but the top 30, and that's called the Sensex. Now, of course, the index is something called a weighted average, but we won't cover that over here. Now, let's suppose the top company went bankrupt for whatever reason. What would happen to the index?
It'll get replaced.
It'll get replaced. So this is very interesting. That means if the company is performing well and is relatively larger to everyone else, it stays in the list, otherwise it's removed. If you look at this over here, you'll see this is what Nifty looks like. This from year 2000 to now. Look at this.
Yeah.
It started here at 900 rupees ka low, and it's at 22,000, almost 23,000 right now. Do you think the composition of the index of these 50 companies way back in 2000 is the same as 2024?
No.
It would have got replaced, right?
Yeah.
So the companies which didn't do well are gone. The companies which grew were back in. What if instead of picking stocks, you just picked the index? Now, there are multiple kinds of index, but the point is in any of the indices, you're not selecting the stock. It's just happening based on this one logic.
Who's doing this? Is it an algorithm?
Well, it's actually a very simple calculation. You can just do it on Excel. So mutual funds have index funds. So there are two kinds of funds. The first kind is the one that we just showed you, the one where the manager is selecting stocks, making a bucket out of it and saying, this is my fund. The second kind of fund is where the manager isn't actively picking the stocks. He's just following this logic. This is a simple way for you to get started investing. Invest in an index fund, but make sure you start with a low-cost index fund.
What is a low-cost index?
So I told you that the managers or the company charges something to manage the fund, which
Yeah.
was where? This guy, right?
This girl.
This girl, okay. This queen charges something to manage your fund, right? And as they should, because they're managing the fund. Now, if they're using the logic of this, where you don't really have to do stock selection, shouldn't the cost be lower?
Yeah.
So for example, a managed fund would be upwards of 1% a year. But if you do this version where it's an index fund, you can actually be paying something as low as 0.3%. And over a period of time, it actually compounds because that much less money is leaving your account and not going to someone as fees.
I have a question. 0.3 और 1 में कितना ही difference है? 0.7 से क्या हो जाएगा?
नहीं है, actually उतना फर्क नहीं है. Do abracadabra. Do this. Do abracadabra. See, okay. I have a magical sheet over here. Okay. So imagine if you did a monthly SIP of 15,000 rupees and you invested in two funds, 15,000, 15,000. One in a low expense ratio fund and one in a higher expense ratio fund.
Wait, what is expense ratio?
Nothing. It's just the fees you're being charged by the asset management company or the fund house basically. That's called the expense ratio or the total expense ratio called TER. It basically combines the management fees, the administrative fees and the marketing and distribution expenses of the fund. Okay, so let's get back to the sheet. What do you think is the difference in say 20 years? And I'm assuming a 12% return because over the last many years, Nifty has averaged about 12%. That 15,000 SIP in 20 years becomes 1.46 crores versus the other fund, which is 1.15 crores. That's a difference of 31 lakhs.
But again, my point is कि remove the percentages.
Okay.
Who's better at this?
The answer is, no one knows. And I have something very interesting here. It's called the Spiva report. Say it with me. This is what it is. Basically, what these guys did is they have measured the returns of indices versus managed funds. And it turns out 63% of the time, active fund managers have not been able to beat passive investing. Passive investing is investing in an index because no one's managing it. It's passive. If you want to take the simple way without thinking too much, then over a long period of time, a low-cost index fund is just tension-free. It's probably better.
I'll opt for that.
Cool. So your homework is to pick a bunch of funds and tell me how you picked it. Cool?
Awesome. And your homework is to follow.
This is not Insta. Subscribe.
Insta पे कर देना है.
Tanya. See you in the next episode. If I'm a nice boss, it will not feel...
Nothing out of the ordinary.
Real. No, because in real life I'm nice, no? So if I give you some money, you want to do scrunchy? No, use the power. Relatability, baby. अरे बाग शट बहुत बढ़िया